Stocks close higher on Wall Street after a cooler than expected PCE inflation print boosts hopes of a less hawkish Fed. The Dow, Nasdaq and the S&P 500 all gain over 1% each. Asian markets begin Christmas week with gains. The GIFT Nifty is also suggesting a gap up start for now for our own markets. Gold prices gain as the dollar and treasury yields slip following a cooler than expected PCE inflation print in the US. Crude prices remain range bound with Brent trading around $73 a barrel. The GST Council defers talks on tax cuts for insurance and food delivery charges, reaches no consensus on bringing ATF under the GST ambit. The Council, though, clarifies on taxing popcorn, says that ready-to-eat popcorn will be taxed at 5%, pre-packaged popcorn will be subject to 12% GST, and caramel popcorn will attract an 18% GST rate. And as part of the latest index rejig, Zomato will replace JSW Steel as part of the sensex today. And as part of that reshuffle on Friday, the stock, according to Nuvama, saw inflows of close to $500 million. It is finally beginning to look a lot like Christmas because you can see green on the screen as of now. Good morning. You're watching Power Breakfast here on CNBC TV 18 in the Mumbai News Center. I'm Hormuz Patakia. Let's first take a look at how the Asian markets are faring. And as I just mentioned, there is some green on the screen today. The Hang Seng trading with gains of 0.5%. The Taiwanese index, though, is the outperformer, trading with gains of almost 2.5%. As we speak, gains are also seen across the board in Japan, in South Korea. The Nikkei is up over 1%. The Kospi is up over 1.25%, and the broader market index in South Korea too is gaining over 1.5% as we speak. The Chinese indices, though, are currently flat, is the CSI 300, but the index is trading above the flat line as well. So green across the screen in Asia. Pull up the GIFT Nifty as well, and that will give you an idea of how our own markets are likely to open. And after the week that we had, the bulls will take this with both hands. The implied open suggesting a gap up for our own markets. 175 points higher is what the implied open is suggesting as of now. But the handover from Wall Street was also a positive one because the indices there ended higher on the back of a cooler than expected inflation print. Now, the Dow gained almost 500 points. The S&P 500 and the Nasdaq both gained over 1% each. But mind you, all the three indices ended significantly off the highs of the day. CNBC's Kate Rooney gets us a wrap of all the action on Wall Street.
U.S. markets were up across the major indexes Friday after some cooler than expected inflation data had the markets bouncing back from a rough week. The Dow up 498 points, the S&P 500 up 64 points, and the tech-heavy Nasdaq up 200 points. The Federal Reserve's preferred inflation measure, the Personal Consumption Expenditures Price Index, increased 2.4% year over year in November. That was less than economists had expected and still higher than the Fed's target of 2%. And housing inflation, which has been one of the toughest parts in this economic cycle, did show some signs of easing, rising for the month by just 0.2%. And Netflix continued its push into sports, announcing a deal Friday for U.S. streaming rights to the 2027 and 2031 Women's Soccer World Cup. Netflix says coverage will also include original documentaries around major players and the rapidly growing fan base in the sport. The announcement coming just days before it will stream its first ever NFL games on Christmas Day. That's what's happening here in the U.S. Back to you in Mumbai.
Well, let us in fact also get you some reactions coming in on that PCE inflation print that came in from Chicago Fed President Austin Goolsbee, and an opinion on the U.S. markets from Yardeni Research's Ed Yardeni.
I have been feeling like there's a little more uncertainty, there's a little more noise, and so I raised a bit the, what do you want to call it, the shallowness. I made the rate path a little more shallow in 2025, but I've been saying that the overall thread is that inflation is way down. I believe we're on path to 2%, and over the next 12 to 18 months, rates can still go down a fair amount. And whether that happens 3 months earlier or 3 months later, I don't think is the most material thing. The thing that's material is we've gotten inflation down. We need to keep making some progress. We've gotten unemployment to a kind of a stable, full employment basis. We want to keep that stabilized. And the way to do that is to have the rates come down to something like neutral.
Well, I think we are in correction mode right now. We could be down 10%. I mean, there's certainly some issues here. The circus is back in town in Washington, or maybe it never left. And so that's certainly become an issue. I think the market did a pretty good job the other day of discounting the fact that the Fed has come to realize the economy is strong, inflation's a little sticky, so there's really no rush to lower interest rates much more next year. And now they're talking about 2 rather than 4. There's a longshoreman's strike potential in the middle of the month. And then, of course, there's always my friends, the bond vigilantes. They're getting a little twitchy here. They're not really happy with what's going on. I think Trump, for a while there, bought himself some time with the Doge boys, or that were set to kind of make things saner in Washington, and that's a big task, as we're seeing.
And that's all the global market action. But how will all of these overnight cues impact our own markets? We have our research team joining in with how the trade setup looks like, the stocks that are likely to be in the news, and of course the setup on the F&O side of things as well. Firstly, Vivek joins in to get all the market cues we need to watch out for. Vivek, good morning. Some bit of relief in the offing, I guess.
That's right. Expect a very truncated Santa rally. You have a couple of days going into Christmas, and it's a truncated week as well this particular week. When you're talking about how the overnight cues looking at Friday, you did see quite a bit of a bounce back as far as the U.S. markets were concerned. All of the U.S. markets managed to end with gains of over 1%. Now, the other thing that's positive is the fact that crude oil markets actually saw significant sell-off in the week gone by. Friday, they were in the green, but in the week gone by, you did see cuts of almost over 2.5% as far as both Brent as well as NYMEX crude were concerned. When you're talking about the Indian market last week did very poorly. Biggest weekly fall in over 2 years. Nifty Bank was down almost 5% in the week gone by, and Nifty Pharma Index, was the hiding spot, and that was the sole sectoral gainer. Now, talking about Friday's session, again, a session where any attempt at recovery was sold into very quickly and ended near the day's lowest point. Friday, biggest fall in over 4 months. IT stocks were expected to do well given the fact that Accenture results were good, the guidance was great, but despite that, you did see quite a bit of a sell-off emerging as far as the entire IT pack was concerned. Market breadth largely in favor of declines, advanced decline ratio almost in the ratio of 1:5. Remember, a couple of sectors that did very poorly. One of them was capital goods. Siemens, after the analyst con call, moderating capex as far as the overall environment was concerned, was something that was flagged off by the company. Stock fell, and along with it, tracked quite a few of the other capital good names as well. Remember, today you will be seeing a new look sensex. Zomato is in the sensex, and it's at the expense of JSW Steel. Asian markets, GIFT Nifty, like you indicated, indicating a gap start for our markets today.
Well, out of all things that I've said so far on the show, the most important takeaway was highlighted by Vivek, that it is a truncated week. So Vivek, thanks a lot for that. Over to Abhishek now and list out the stocks that you need to watch out for. Abhishek, good morning. What's on your list?
Good morning, Omar. To begin with, IOC, our board has approved investment of around 657 crore in Niam project in Odisha. So AGI Greenpack, they will raise about 1,500 crore via various methods like preferential issue, QIP and other modes. Now, Competition Commission of India has approved Ultratech Siemens acquisition of India Siemens. So they will acquire about 32.7% stake from the promoter as well as a member of promoter group, and they will make an open offer of around 26% equity in the company for a floor price of 390 per share. Now, this 390 per share is 15% higher than Friday's closing price. Team leads to acquire stake in TSR Darashaw about 90% and about 30% stake in Crystal HR and Security. NHPC has signed a MOU with Bihar government. They will invest about 5,500 crore. They will develop around 1,000 megawatt of solar energy and green hydro, mobility pilot projects in Bihar. Piramal Enterprise, the board has approved about raising 2,000 crore via QIP in one or more tranches. Fortis Healthcare, they will acquire about 7.6% stake in Agilus Diagnostic for a consideration of 429 crore. Vedanta, they will not approve demerger of base metals from undertaking company. The demerger has been pushed on for a future date. NTPC Green Energy, they have signed memorandum of understanding with the Bihar government as well. Back to you.
Abhishek, thanks a lot for that. And finally, over to Sudarshan, who joins in with cues from the F&O space. Sudarshan, good morning. A forgettable week for the index, the worst of 2024. Some key levels breached as well. What's the F&O setup looking like?
Morning, Harmaz. So while recovery is likely indicating what GIFT Nifty is indicating in one cues like we have the healthy cues, but we'll have to see if we hold on to those recovery, because it was like last week we saw Nifty posting biggest fall in the last 30 months. All the major indices were down. Nifty and Sensex were down almost 5%. It was a big fall that we have seen in mid-cap index too. And for today, GIFT Nifty is indicating a healthy start. GIFT Nifty is currently up almost 200 points. But on the F&O front, data remains unsupportive. Talking about the flows in the cash market first, FIs continue to sell. On Friday, we saw FIs selling almost with 3,600 crore, and DIs have bought around 1,370 crore. In the futures market, two FIs have sold more than 1,500 crore, while they have added long positions of 6,700 contracts. But in front of that, they have added short positions as well, and they have added short positions of more than 29,700 contracts. And with this, FI's long exposure now reduced to 31%, which is the lowest level that we have seen in last 1 month. But on the client side, long exposure remains healthy, and it's currently at 65%. On the options front, two call options that were active, 23,900 and 23,800. And on the put side, 23,200 put has seen addition of almost 22 lakh shares. And here, premium is almost 49. Important levels for Nifty, support is now seen somewhere around 23,250 and resistance is at 23,850. That is also 200 daily moving average. Now, lastly, stocks in focus. Two stocks that have come out of ban, and those stocks are NMDC and PVR Inox. And one stock has entered F&O ban, that is RBL Bank. So keep an eye on these stocks as well.
RBL Bank exited the F&O ban on Friday, back in it today. So Sudarshan, thanks a lot for that update. Time for a short break. Up next, we get you all the key highlights from the 55th GST Council meeting that took place over the weekend. Stay tuned. Back on the other side. Welcome back. Now, the 55th GST Council meeting chaired by Finance Minister Nirmala Sitharaman deferred a decision to lower the tax rate on health and life insurance premiums and food delivery charges of e-commerce aggregators such as Swiggy and Zomato. It also discussed the inclusion of aviation turbine fuel under GST, but deferred a decision since most of the states were not in favor of losing their right to tax it. Now, the council, however, clarified on why different varieties of popcorn like regular, salted and spiced and caramelized carry different rates of GST. Now, here's what the finance minister had to say on this.
We have our Minister of State, Pankaj Chaudhary ji, who chaired the compensation cess-related group of ministers. They have given a request to the council, which the council has accepted today, that they need more time to get into the details. So that has been given an extension. Nothing specifically mentioned about the term, but extension has been provided. Health insurance related GOM work also requires more time, so they have gone to take more time. On one or two specific grounds which I would like to put before you as to why it had to have more time, insurance and therefore the insurance regulators' input is awaited. IRDAI, the Insurance Regulatory and Development Authorities' inputs have not come, so the GOM felt that it needed a bit more time. GOM में विस्तार से डिस्कशन हुआ है और हेल्थ इंश्योरेंस के ऊपर भी, लाइफ इंश्योरेंस के ऊपर भी, फिर भी और थोड़ा जानकारी उनको चाहिए, जैसे कि मैंने मेरे ओपनिंग स्टेटमेंट में बताया, इंश्योरेंस रेगुलेटर से भी उनको रेगुलेटर का गाइडेंस मिलना है, वो भी मिलने के बाद फिर फाइनलाइज करेंगे GOM, फिर आएगा काउंसिल में. There was this request placed on the agenda whether ATF, air traffic fuel, should be brought into the GST, because periodically we've had airlines telling us, civil aviation requesting us, that ATF should be brought into the GST. It's not been agreed on. States did not feel comfortable. They didn't want the ATF because they saw it as part of the crude, petroleum, diesel basket, and therefore they said that alone cannot be taken out, and therefore that continues to remain where it is today. There was also a suggestion just ATF could be put to a GOM so that they can think whether it is worthy of consideration to be brought into the GST, but they did not want anything done about ATF.
Now, my colleague Sapna Das also spoke to Revenue Secretary Ajay Seth following what that he had to say in conversation on the GST Council's view on insurance and food delivery. Listen in.
It's not a question of council not being in a position to decide. These are the complex issues are there. There are expectations of the policy holders that that is how that entire thing has started. So group of ministers require more time, and that deliberations are going on because different states have different views on this.
Could you share some broadly?
See, if there were specific discussion on those views, I could have shared it. I was not party to what is getting deliberated on group of ministers, but yes, what the officers meeting yesterday went into, and there are different states look at the issues from a different perspective.
Okay, but sir, also, insurance is a known sector, so why the need to consult the IRDA right now? I mean, is this an afterthought? I'm just trying to ask. And any revenue concerns being raised by the states?
See, the question is why the regulator. See, consulting the regulator is so that there is a better understanding of the issues involved. It should not be it should be a well-informed decision. So that is the purpose that we should have consulted all, that how it will pan out to be at grounds, does regulator has any suggestion, etc. into those issues. So those were the concerns.
One more quick one, sir. On the ATF, as FM has also clarified, states are not in favor. So basically, of getting this product under the GST ambit, does it now imply that going forward, there may not be any further discussion even in terms of bringing natural gas under GST? And so this is not a speculative query. This has been going the rounds last 1 or 2 odd years.
See, again, I'm not getting into the speculation. Today, what was brought before the council was ATF, and the question being posed was, should there be a structured deliberation around implications of ATF being part of GST in terms of on the air passengers, airfares, on airlines, on state revenues, and the few states were supportive, but the general sense was this is not the time to get into those deliberations.
Okay. And one quick one on quick commerce, just a clarification, what has emerged, sir? Just that and we are done.
Regarding?
On quick commerce, on food delivery apps versus the food actually.
See, as Honorable Finance Minister said, that decision was again felt that more deliberations are needed. Several states felt that on the delivery, they felt that it is a composite supply, so it should be taxed at the same rate as the food item. Some other felt that have we rightly understood what the composite delivery of service here is involved, and some others felt that delivery is a distinct service and a goods is a distinct one. How do we deal with it? And as we say, that GST is a tax system which blurs or which takes away the distinction between goods and services. So the sense was, have we thought through the implications across all products, all goods and services which get delivered, where the deliveries are involved? So that was really a sense that one has to be cautious while deciding the things. One should not be rushing into these decisions.
The important takeaways there from the GST Council meeting. Time for a short break. Cues from the commodities market up next. Stay tuned. Welcome back, and Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. What are you picking up?
Well, first of all, Hormuz, I have to say that trading is expected to be subdued this week on lower volumes. It's a shortened last week of the year, so all of that is going to get impacted. But having said that, in the previous week, we've seen the crude oil prices decline by 3%. Now, Sinopec China, which is the largest refinery of China, has said that the crude imports could peak in 2025 and the China oil consumption will peak in 2027. I mean, that really has put some pressure on the prices in the previous week. But the markets also are looking at the OPEC downgrading demand estimates for a fifth time in 2024. And then we are also facing G7 exploring stricter measures on Russia oil price caps. The U.S. also could impose tariffs on China. So the first quarter of January, or rather 2025, promises to be very, very volatile. We also have seen pressure come in or build up in metals as we head towards the year end. So copper, aluminum, zinc, nickel, everything has seen a decline. Copper actually fell by 2% in the previous week. We've seen hawkish U.S. Fed, China demand uncertainties, threat of higher U.S. tariffs, all of that bothering these markets.
A lot of headwinds for these markets as we go into the holiday season. Manisha, thanks a lot for that. But with that, it's a wrap on this edition of Power Breakfast from me and the team that put this show together. Thank you so much for watching. Bazaar Morning Call sets you up for the first day of Christmas week.